Welcome back to our Forex Fundamentals series. In today's lesson, we're tackling one of the most important topics in all of Forex trading: currency pairs, major, minor, and exotic. If you're new to Forex, understanding currency pairs is absolutely essential. They're the foundation of every trade you'll ever execute. By the end of this video, you'll know the three main types of currency pairs, how they behave, and which ones might suit your trading style. Let's jump right in. What are currency pairs? Before we break down the categories, let's make sure the basics are clear. A currency pair shows the relative value of one currency compared to another. For example, when you see Euro-USD, it tells you how many US dollars you need to buy 1 euro. There are hundreds of possible combinations, but the Forex market focuses heavily on a select group. Traders divide currency pairs into three major groups: major pairs, minor or cross-currency pairs, exotic pairs. Each group has its own personality, risk level, and trading style. Major currency pairs. Let's start with the majors, the kingpins of Forex. Major currency pairs always include the US dollar, USD, on one side. Why? Because the USD is the world's reserve currency and the most traded currency on the planet. Here are the most common major pairs: Euro-USD, Euro-US dollar, USD-JPY, US dollar Japanese yen, GBP-USD, British pound US dollar, USD-CHF, US dollar Swiss franc, AUD-USD, Australian dollar US dollar, NZD-USD, New Zealand dollar US dollar, USD-CAD, US dollar Canadian dollar. So, what makes major pairs so popular? High liquidity. They have the most buyers and sellers. Low spreads, great for beginners and day traders. Stable price movement. Their volatility is more predictable. Massive market influence. News events around these currencies are widely covered. If you're just starting out, major pairs are your safest entry point. Their movements are cleaner, easier to analyze, and backed by tons of historical data. Minor currency pairs. Next up are the minor pairs, also called cross-currency pairs. These pairs do not include the US dollar. They are literally crosses between other major currencies. Examples include Euro-GBP, Euro-British pound, AUD-JPY, Australian dollar Japanese yen, GBP-JPY, British pound Japanese yen, Euro-AUD, Euro-Australian dollar, CAD-JPY, Canadian dollar Japanese yen. Minor pairs still offer solid liquidity, reasonable spreads, good volatility for trading opportunities. But they're not as smooth as the majors. Why? Because without the US dollar as a stabilizing anchor, minor pairs can react more sensitively to economic events. For example, GBP-JPY is famously volatile, earning its nickname the Dragon. Minor pairs are perfect for traders who want more volatility, prefer unique price action, are looking to diversify beyond USD-based pairs. Exotic currency pairs. Now let's talk about the wild cards of Forex, exotic currency pairs. These pairs combine one major currency with one currency from an emerging or smaller economy. Examples include USD-SGD, US dollar Singapore dollar, Euro-TRY, Euro-Turkish lira, USD-THB, US dollar Thai baht, GBP-PLN, British pound Polish zloty, AUD-MXN, Australian dollar Mexican peso. So what makes exotic pairs exotic? They're less liquid. They have higher spreads. They're more volatile. Economic and political factors have a huge impact. Trading exotic pairs can feel exciting, but they come with risks. Wider spreads mean higher costs. Sudden price spikes can occur. News from emerging markets can cause extreme volatility. Exotics are best suited for experienced traders with advanced risk management and strong patience. How to choose the right currency pairs. Now that you understand the categories, how do you decide which pairs to trade? Here are a few tips. New traders should start with major pairs for smoother movement. Intermediate traders can add minor pairs for more opportunities. Experienced traders may explore exotic pairs for higher reward potential, but must manage risk carefully. Also consider your risk tolerance. Your trading strategy. Market volatility. Time of day, sessions matter. Economic news releases. Each pair has its own personality, so take the time to study the movements and behaviors that match your style. And that wraps up today's lesson. You now understand major currency pairs, minor or cross-currency pairs, exotic pairs, how they differ and how to choose the right ones. This knowledge forms the foundation of every decision you'll make in Forex trading. If you found value in this video, don't forget to like, comment, and subscribe. It helps us reach more traders just like you. Join me in the next lesson as we break down currency quotes and how to read them like a pro. Thanks for watching, and I'll see you in the next video.